Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 3rd of October 2021. Some of you might be finding the markets tough going at the moment, so I thought it might be a good time for a portfolio health check. Portfolios are known to be at risk from a variety of pathological conditions ranging from mild to terminal. Early diagnosis and treatment is therefore recommended. The first step is to ascertain the symptoms by taking a history. So let's start with symptoms. The most common symptom is pain, and we must ascertain the character of the pain. Is it acute, sharp stabbing pain due to a sudden large drawdown? Or is it a dull chronic pain due to lingering low-grade losses? Do you have insomnia due to the stress of losses? Does looking at your portfolio cause anxiety or even depression? Next, we need to do a thorough physical examination. This means checking the portfolio vitals. What is the total return for your portfolio, and what are the returns for each asset class? Now, here's one thing that I don't think many people actually do, is to actually chart their total returns over time. And what you might get with that is, what you ideally want is a chart that's kind of going like this. So, similar to price charts, really. A lot of people kind of expect this kind of chart. And that's unrealistic. What you really don't want is a chart that's kind of sideways or going downwards. So that's just something to think about considering when assessing portfolio vitals. The other thing to look at are your assets weighted appropriately for you and your particular risk tolerance? And of course, what are your debt levels? Your portfolio might be diagnosed with one or more of a variety of pathological conditions. Let's discuss each one in turn. Homogeneisosis. This is a non-infectious disease where a portfolio consists of multiple stocks, but all belonging to the same or similar asset classes. Such portfolios lack significant diversification. So if your whole portfolio consists of precious metals related investments, then you have this condition. Positionoma. This is a type of lump in your portfolio that can either be benign, but it can be malignant. This relates to position sizing. So if you've placed a large chunk of your initial investment in speculative assets, then you're at risk of developing a positionoma. The more speculative, then the greater the risk of it turning malignant. Leveragitis. This is a nasty inflammatory disease that does have a high mortality rate. There's a high incidence of this disease during market euphorias, and the mortality occurs when the euphoria ends. This occurs when a portfolio is inappropriately leveraged. And finally, we have hypostrategem. This is an endocrine disease where a portfolio is lacking in an overall strategy. Once a diagnosis has been made, then a suitable treatment must be administered. The best treatment for homogeneisosis is basically diversification of your portfolio. So see my previous video on that if you want more details on that topic. But in particular, it's really important to have 4 components in your portfolio: defensive, income producing, insurance, and speculative. And look, some assets cover, 2 of these. So look, let's give an example. Physical gold. From my point of view, I think it's there as insurance part of your portfolio, and so it should be treated accordingly. In contrast, gold and silver mining stocks fit into the speculative section there. In the case of a positionoma, prevention is best. When a hot new opportunity arises, it is very tempting to drop a larger than prudent amount in the hopes of hitting it big. When it comes to speculative positions, only invest what you're willing to lose. That's really, really important. And particularly when things get manic, people forget this. If it's too late and you realise you already have a positionoma, then a surgical trimming is recommended. Leveragitis. Now, don't get me wrong here. Leverage isn't always a terrible idea. So, for example, using leverage to buy real estate over the past 40 years has been highly beneficial for many, particularly because, the scales have been tipped in your favour by the central banks. In contrast, using leverage to buy highly speculative exploration mining stocks during a bear market is probably going to end in disaster. So leverage should be used appropriately. When it's used inappropriately, the fatality rate can be high. If your portfolio shows any signs of leveragitis, and this could include things like sweating, palpitations, anxiety, then in that case, urgent surgery to reduce the exposure is recommended. And finally, hypostrategism, which is actually a very common and underdiagnosed condition. What is your strategy for your whole portfolio as well as for individual stocks? Do you have entry and exit plans? What techniques will you rely on to make your assessments? And how will you cope with volatility? Now, when I first started out, I went down that traditional route and learned from all those, mainstream books about technical analysis, trading, and, listening to the mainstream media and kind of using various indicators and using stop losses and all that stuff. But when I did that, I never really got anywhere. I just wasn't really succeeding. And, I put in a lot of work and just, my portfolio was looking pretty drab, let's say. So in the end, I took quite a long break. And then when I returned, I decided to take a different approach. And I basically worked on tailoring my approach to my needs and also to my abilities. And I think that's really important. What works for me isn't necessarily going to work for you. And you as an individual have to sort out an individual strategy for yourself. With my initial traditional approach, I found that I was concentrating far too much on trying to be right about the charts. And the problem is that I'm often wrong, as you've seen, over the past couple of years. But the thing is, I've developed a kind of way of doing things that seems to work now. And it doesn't rely on me being always right about the charts. Now, that probably sounds really strange. So let me try and explain this with an example. So this is a chart of an actual stock that I had bought. And now look, it's not a precious metal stock, but it is in a speculative and volatile asset class. And I bought it at a time when I thought there was significant asymmetry and I thought the stock was undervalued. So as you can see, initially it went sideways, didn't do much for a while. And at one point, it actually lost 60% of its value. It's a bit squashed up on here, but that is a 60% drop. Now, if I'd actually discussed this stock on this channel at the time of buying, I'm pretty sure I would have got absolutely slaughtered in the comments, And, even as it was dropping, if I had said, oh, I'm still bullish and that my original thesis is actually intact, I'd have got absolutely hammered. People would have been telling me, oh, you're talking rubbish. Oh, you're letting your emotions get away with you. You're deluded. And I'm sure anyone who would have bought the stock at the same time, many would have basically sold before it hit that bottom there. But I held on because that's part of my strategy. And as you can see from that bottom, price recovered. And again, though, still went sideways for a while. So look, not looking great. And, this does take patience, this stuff, which is something that sounds easy, but in reality is not so easy. Anyway, the next thing was this happened. And it actually turned out to be a 10-bagger in the space of 2 years. Now, some might say, oh, look, you got the technical analysis wrong. You're rubbish at picking the bottom there. And yeah, they'll be right in saying that. But the final result is actually good enough for me. Had I bought at the bottom, I could have made twice as much. It would have been a 20-bagger. But if you think like that, then basically that's greed talking. I don't think it's good to be unrealistic like that. I know that I don't have the ability to pick bottoms in that way. But overall, for me, this was a success. Now, you might say, oh, she just got lucky with that one. But I'm getting the feeling it's more than luck. This has happened on more than one occasion. And actually, it's happened multiple times. So I don't think it is just pure luck. But having said that, I have also bought stocks where they continued to flatline and do nothing. And I even had one that went completely bankrupt. Now, don't get me wrong with this. I'm not saying that you just buy any old stock and hold it and hope that something like this happens. No, there's a lot of research that goes into this. And if you look into my videos over the last couple of years, you'll get an idea about the way I think about things. But a key element is looking for asymmetry and looking at the fundamentals, looking for potential longer term drivers for future price action and so on. So, don't take this at face value. There's a lot more depth involved with this. But I've been pretty open in discussing a lot of those factors in videos over the past. Now, one of the things that is key here is that when you're looking at volatile speculative stocks, I don't use a numerical stop loss. When I tried using numerical stop losses, when I was using that traditional way of doing things, I didn't find it helpful. And in the end, what happened was I ended up missing out on price action like this. And, obviously, if I had used one here, I'm pretty sure I'd have been out of the trade. And, look, some people say, oh, but then you could have got back in at a later stage. But, psychologically, it's hard to do that, And I don't think I'm good enough to have known when price was going to go up. Getting timing for these things is really difficult. The other thing to note is that the size of the position should be such that you're accepting of potentially losing the whole lot. Okay. And if you do so, it's not, you should size it in such a way that it's not completely disastrous for your portfolio. And that's a really big deal. A lot of people get caught up, particularly if they've had a result like this, and suddenly start piling in. The thing is, you can't select which ones of your stocks are going to do this. And as I've said, I've had a mixed bag. Now, coping with such large drawdowns is tough, but you must be in a position where you can accept it. And, and this is all specific to these speculative stocks. If your underlying thesis remains intact, then there should be no reason to sell. And actually, with these types of stocks, it's actually really common. I was looking through my portfolio, and all of the ones that have done this kind of thing, I think there's only one where I got less than I think it was less than 5% drawdown. Everything else has been a minimum of 50% drawdown. One of them was even 75%, yeah. But they went on to be multi-baggers later on. Now, this is not for everyone. It's not everyone's cup of tea. All I'm saying is that I had to change my mindset to find something that worked for me. And it does take a while to get your head around that. And it requires watching all my previous videos to understand my mindset here. Okay. So here's just an example. This is a representation of roughly what my portfolio kind of looks like. And at first glance, it kind of looks like a war zone, doesn't it? And yeah, I've been wrong on some of the stocks. And I've also been wrong on the technical analysis. But yet, my overall portfolio remains pretty healthy despite drawdowns. I think my wrong portfolio is actually way better than the one I had when I was concentrating on being right all the time. Now, note that this only applies to the speculative part of your portfolio. This isn't what the other components of your portfolio should look like, okay? This is purely the speculative section. Now, the other thing that you'll note is that around 20% of these picks did spectacularly well, and that kind of fits in with that 80-20 rule. So what you'll find is that 20% of your picks will make up 80% of your returns. And that's quite difficult for a lot of people to get their head around, but it just seems to work. Now, of course, you don't know when you're buying these things which one will be that 20% spectacular gainer. And certainly, I found that the ones that did really well weren't the ones that I was expecting would. So that's another thing. And that's the reason why it's best not to overweight or pile in on one particular thing as well, because predictive power for these things isn't as good as you think it is. Well, anyway, that's certainly been the case for me. Now, because of this high variability, that's the reason why I don't really like the idea of discussing individual stock picks here. Just because, look, as you can see here, I'm not consistently good at it. And, what I'd hate to do is, say I mentioned stock A and D, and someone had piled in without using the strategy that I used. That would be a disaster. I'd much prefer to give you the principles by which I work and, take the bits that you like, discard the bits that you don't like, and, build your own strategy. I think that's a lot more valuable than giving you individual names, because that's not the whole story. So, in conclusion, don't chase perfection in the markets. I can categorically say it's unattainable on a consistent basis. Being wrong doesn't necessarily mean a disaster. You've got to plan your portfolio to account for being wrong and actually embrace being wrong. Overall, the only metric that counts is your profit. Don't let anyone try and persuade you otherwise. So that concludes today's consultation. Don't worry, you won't be receiving an invoice. This one's on Dr. Diora. Next up, the market update. Let's start with gold priced in US dollars on the daily scale. And last week we were talking about this 1720 area, and amazingly it has held for now. That's good. As I said, I wouldn't want it to go any lower than that. Now, will it do so? It's too early to say at the moment. And the problem here is that basically we've been in this sideways movement for months now. And so it's very difficult to kind of say which direction it's going to go in. What I can say is that if we drop below this 1680 level, then much lower targets are to come. If we go above this roughly 1840 level, then much higher targets potentially to come. But until that happens, I think we're just going to be moving in this area until it picks a direction. So what do we need here? I think the next hurdle is going to be the 1800. We need to get above there. It's hard to know at the moment whether this is just zigzagging up and down and we're in for another drop here. So yeah, let's just wait and see. And silver, now silver is unlike gold, it's not going sideways, it's definitely been going down. So this is in this downtrend here. And as long as it's in the downtrend, we have to assume it's going to keep going. Now, obviously we had a very nice reversal over here. The problem is though, is we need to get much higher than that. We need to get out of this channel basically. And so 2350 would be good if we can get above there. At the moment, we're just above the midline here. This midline's been pretty good. You can see that it's worked over here and here, kind of here, I guess, and definitely worked quite well here. So what we're looking for is support on that midline and then moving upwards if it's going to go up. Now, of course, it can go down and break through this channel to the downside as well. So at the moment, there's no signs of a bottom. So we just have to wait for that to happen, really. Now, another way of looking at it is to look at sentiment. And so there's different ways of measuring sentiment. The problem with sentiment is that it's a very subjective thing. It's very woolly. And so there are different metrics, but often I find the metrics tend to agree with each other. But of course, it doesn't necessarily tell you that the bottom is in, but it kind of gives you a rough guide at least. So in terms of sentiment, US dollar is 89. So of course, the higher the number, the more bullish people are about it. So 89 seems quite high to me. Of course, gold is low at 10. I think obviously 0 will be, nobody's interested in buying it at all. Of course, it never hits 0. And for silver, it's 9. So we're getting into single figures there now. So that's with the daily sentiment index. So when you're getting numbers in the low side, that suggests, that, people are getting pretty fed up, and that's a positive. But of course, it's not going to nail exactly where the bottom is. So yeah, can we drop further? Yeah, it's possible. Here's another one that I found. So this is a silver sentiment. And here what they've done is do a long-term moving average of the silver sentiment. And these dates are quite small here. So I've written the dates where the peaks in sentiment were, which was December 2019, August of last year, of course, and March. And look at it now. It's pretty much in the dumpster right now, isn't it? So again, that's a potentially positive sign there. And this is the Hulbert, I think that's how you say it, gold newsletter sentiment index. And right now it's minus 45, sorry. I think it got as low as 50 at one point in the last 20 years, minus 50, sorry, in the last 20 years. So this is still pretty low. So again, low sentiment. And this is another one that I found. And what this looks at, this is for the minors. So this is the percentage of stocks in the GDX that are above their 200-day exponential moving average. And at the bottom here, we've got the GDX chart here. And as you can see, these bits circled in purple show when there were 0 stocks in the GDX 200. I think that's 200. No, in the GDX that are above their 200-day move, below their 200-day moving average, right? So that's happened 3 times in the past couple of years, and each time that's marked a low here and here. Question is it going to work again? I mean, it is at 0 now. So another potentially positive sign there. Now, of course, just because there are 0 stocks below that 200-day moving average, you can't go lower than 0. So that doesn't mean that this can't drop even further. So, you've got to be careful how you interpret that. And let's have a look at the GDX. Now, last time I'd drawn this channel here, and we got a touch last week and bounced up off of that. And we're kind of on this green line on the pitchfork. Now, there is potential for this to go down to about 26, I think. At the moment, there's nothing to say that we've bottomed out. And because we're in a downtrend, we have to assume we're going to keep going down until we see evidence otherwise. And here we have this gap that's been bugging me for ages and ages. I think it was bugging me back here even, for those of you who've been listening for that long. So there is potential for that to be filled. So just watch out for that. Okay, and then finally we have the silver junior miners, and this is on the weekly scale. And what I've done here, this kind of to me looks like it's forming a triangle. And the question is, how deep is this leg going to go? I don't think it's going to go all the way down to here. The question is how far. So a couple of things. I think last time, so this is the Fibonacci retracement here. And I was unsure about whether to put the top over here or over here. Now, here I've kind of cheated and put it in between, which isn't perfect. But anyway, if I put it over here, then we've actually gone below the 50% level. If I put it on this one, it's actually bang on. So are we going to get a reversal here? Don't know. There's nothing to suggest a bottom, as with all the other things I've been talking about. So if we do drop further below, the next level is here at 10. Now I'm doubtful we're going to go below 10, but look, it's possible. Even down here is possible, but we'll just take it one step at a time. Now, another thing I was looking at, this is the RSI, and that too seems to be in a kind of triangle, I guess. And particularly this lower line seems to be pretty good. It's had multiple touches here, here, here. We haven't quite reached it here, which does make me wonder if we just got one more little drop to come to hit that before turning around. Look, I don't know how helpful that is, but it's just another observation to look at. So yeah, we're just going to have to wait. It's going to keep us in a nail-biting position right now. That's it from me for this week. All the best and see you next week. Bye.